Okay. So who is secretsoftaxlieninvesting.com? Well, my name is Stephen Swenson. I attended my first tax sale in 1999. I was a brand new real estate agent. My broker invited me to attend the auction, and I saw that was the first time I attended it, and it was a tax deed auction. I saw properties being purchased for 20–30% of their value, and this was a time where the real estate market within this area was incredibly hot. Prices were, homes were being listed and having 3 or 4 offers and selling for higher than they had listed the property. I mean, that that's crazy to think about. And so that was my first experience in tax sale investing. I continued to research, learn about it, started doing coaching and training other investors and individuals, and then established with a business partner, Tax Sale Solutions, in 2007. And what we did as far as that was concerned is we worked directly with the seminar companies, providing them with their books, their training, their materials. We were really the trainers for the seminar company, and so we would just handle their students. And we've taught over 20,000 students nationwide. We've done seminars, we've done online trainings for almost 10 years now. So this is something that we've been doing for a long time, and we're just kind of reamping it and going in a different direction. In addition to that, some of our books have been featured on TV infomercials. Before we get started today, I wanted to quickly go through and show you a couple of properties that we've been working on. These are a couple of tax deeds that we purchased about over the last 60 days, maybe about 70 days on one. The first property is a 3-bedroom, 2-bath, has a value of about $52,000. We purchased the property for about $10,100, and with this particular property, we think it's going to best to rent it out, so it's going to rent out for about $900 a month. And with this particular property, it's going to be paid off within a year. And so, you're not looking at a property value that's hundreds of thousands of dollars, but you're also looking at that $10,000 price. What can we sell the property for if we needed to, or what can we make as far as a rental? And this one works better as a rental. The property below that is a single-family home, 3-bedroom, 1-bath. This property was valued at $65,000. The winning bid on this property was $20,700. We're going to sell this property for $60,000, and so we'll make roughly between $36,000 in profit. And so these are the type of tax lien investing deals or tax deed investing deals that are out there. These are two pretty good examples. Now, as far as the opening bid amounts on this property and the property on the bottom, that started about $10,000 and sold for $20,000. The property above that started about $5,000 and ended up selling for $10,000. And so that opening bid amount is going to be, and we're going to get into this in more detail as we go through and talk about tax deeds and tax deed investing. But that opening bid amount is not always going to be what the property sells for. Usually the property is going to sell for higher than that, especially if it's a great property. Okay, looks like we've got a lot of different questions coming in. So let's go ahead and get into what is a tax lien certificate, what is a tax deed, what is a redemption deed. A tax lien is a claim against an asset filed by a government taxing authority against the delinquent taxpayer. There's tax liens, tax deeds, and redemption deeds. And let's go ahead and talk about each one of these briefly, and then we're going to get into other aspects of today's training. As far as tax liens are a lien against real property. They're going to be offered to investors that are willing to pay off the delinquent taxes. And so we either attend a live auction, we purchase over the counter, we purchase tax lien certificates. Tax liens pay investors a great interest rate return. You can earn 12, 18, 25%, 24% off of tax lien certificates. They give property owners a redemption period to repay the taxes, so that property owner is going to have a time period a grace period really that they have before they have to pay you back, pay the county back, which in turn pays you. And that redemption period, if the property owner doesn't pay you back during that redemption period, that tax lien certificate has foreclosure rights. So if the tax lien is not paid back within the redemption period, the lien holder can actually foreclose on the tax lien and become the property owner. And tax lien investing is really one of the safest and easiest ways to go out there and make a great interest rate return. You think of the stock market, the stock market can go up and down. With tax lien certificates, that interest rate's guaranteed, and it's going to be backed on a property that's valued, anywhere between 10 to 50 times that investment amount. So your tax lien is going to really be one of the safest and most secured investments that is available today. Really, if you are looking at earning a good interest rate return on a safe investment, tax lien certificates is really one of the very safest and greatest investments there is. I can't talk enough about good tax lien investing compared to trying to put your money into some other type of interest-bearing account. A COD. May earn you a point, 2 points. Other type of investments are going to take years and years for that investment or that amount that you've put in to double. With tax lien certificate, when you're making 18% a year, and depending on your investment strategy, either you're purchasing them at the end of the redemption period, or waiting for the purchasing at the auction and then waiting for the full redemption period. Depending on your strategy, your money's going to be backed by a great piece of property. Now, if the property owner doesn't pay you back, then you can foreclose on the property, and you're going to get a great piece of real estate for your investment amount. And so we're going to talk a little bit more about tax lien certificates and some of the different ways that you can purchase them. You can purchase them over the line. Online through the internet auctions. You can purchase them over the counter. There's the secondary tax liens that are available, and so there's a lot of different strategies depending on your investment profile, and that's something we're going to get into as we talk in today's training. So tax deed. Now, tax deed investing is for those investors that want to be real estate investors. With tax lien investing, if your desire isn't really to own property, then tax lien investing is probably going to be your way to go. And if you do acquire the property, you're going to get it for such a great cost versus the property value, then you could turn around and flip it for half price or wholesale it and still make an awesome return. And so with tax lien investing, it's really, if you're not looking to do real estate, then that's going to be the best option. Now, if you're looking to become a real estate investor, then tax deed auctions or tax deed investing is really the way to get started. What tax deed states is they don't sell tax liens on an annual basis. So counties won't offer tax liens yearly. What tax deed states do is they wait until that redemption period has already passed, and then the county will foreclose on the property. So the county will go ahead and foreclose on the property, and they're going to create a tax deed or a deed that they're going to auction off at the sale. And so with a tax deed auction, when you're purchasing a tax deed, you're actually acquiring the real estate. Now, depending who the winner bidder is, there's always going to be a winner, that winning bid. That's the person that's going to acquire the property. And so tax deeds offer full property ownership. So if you're looking just to acquire property and that's your primary goal, then tax deed investing is something that you're going to look at. Now, of course, when we're talking about acquiring property, it's going to take a lot more work. Acquiring property, you need to have an exit strategy in place. You need to have more money generally because the property can bid up in price. It can start at anywhere between 5–10% and bid up to over 50%. Now, we recommend looking at not going over a 50% margin on a property, because we want you to have a lot of profit in there. So if there is problems, you can still get out. If you purchase a $100,000 home for $50,000, and you get in there and maybe there's some work that you need to do to really make it sellable. And so you put $10,000 into it and sell it for $80,000. Well, you still were able to make $20,000 on that deal, and may not have to put a ton of work into it. Or maybe you just decided to not do any work and decide to sell it for $70,000. It's a $100,000 home. You bought it for $50,000. You turn around and sell it very quickly for $70,000, which you could probably sell, in a short period of time. And now you've just made $20,000. And so, usually we recommend looking at anywhere between 20–30%. Generally, if you can get it for lower than that, then that's obviously going to be great. If you can get it for 10%, that's perfect. But 20–30%, unless the property's really good, and then it might bid up for higher than that. And so, the thing about tax deeds is you're going to be acquiring property, and you can purchase tax deeds over the counter. You can purchase the tax deeds through online auctions, and you can also attend local auctions. And so, there's going to be half the states in the country. There's a good chance that you may be living in a tax deed state. Well, it's worth it to go out and see what type of properties are available in your area. You may find that there's great properties that are available. You may find that, there's only a handful of properties that come up for auction every year. It just depends on where you live, and really that's going to make all of the difference. And there can be valuable properties in any one of these different types of strategies. So redemption deeds are similar to tax liens and deeds, but they're really a hybrid of both. Redemption deeds are tax deeds with a redemption period. Redemption periods that range on redemption deeds usually are about 2 months to 2 years. Generally, they're about a year. Georgia is a year. Texas has a 6-month redemption period for any property that's not a homestead property, so somebody's personal family home that they live in, or farmland. Those have a 2-year redemption period. So any type of commercial property, any type of residential that's a rental, that's not somebody's primary residence, would go ahead and have a 6-month redemption period. Now with redemption deeds, they usually offer a penalty versus an interest rate return. So with tax lien certificates, that 18% is going to be broken up over a year. So you're going to be earning 1.5% per month. With redemption deeds, they'll many times pay that penalty regardless of when the tax deed redeems. So let's say I purchase a property in Texas at the tax deed auction. It's a little commercial office. That property is going to have a 6-month redemption period. And so if the property owner pays me off after 1 month, then I'm going to make 25%. If they pay me after 5 months, 29 days, a day before I become owner, then I'm still going to make 25%. And so if a property redeems early, then that increases the amount of money you've made on your money, so that's good. And if they don't do it within that time frame, then you're going to acquire the property. But usually it's going to be, the very worst case scenario is you're going to get 25%, per 6 months if we're looking at, non-homestead property. With a homestead property, you're looking at making 25% each year. And so, that's going to be a great return. So as far as redemption deeds, one additional thing that separates them from tax lien investing or tax lien certificates is that some ownership rights are going to be extended to the deed investor. So really what they do with tax deeds is they issue a deed on the property in most cases, but they're not going to record that tax deed or that deed with the county recorder until after that redemption period is passed. So they offer great high interest rate returns, and they also have really a higher chance of acquiring the property than with the tax lien certificate. Nationwide tax liens that are acquired through the deed sale ends up being about 5%. 95% of tax lien certificates redeem. With redemption deeds, that moves up higher because usually the redemption deeds are going to cost a little bit more. In addition to that, you're going to have a shorter redemption period, and there's a better chance of actually acquiring the property. Okay, I'm just quickly looking through some of the questions we have, and we're going to get to them, and some of them we're going to answer as we go throughout the webinar today. So the first steps, well, the first thing you're going to do is you're going to read the home study program. And I know you don't have the home study program yet, but you guys will receive an email from me today where you can download that home study program. You know, this program was sold, you know, across the country in book form for, you know, anywhere between $2,000 to $3,000. And that, of course, that would include, you know, the training and as well, but this is something that just by being on the line tonight, I'm going to go ahead and give you guys the link to download this line today. This morning, I'm going to go ahead and give you guys the link to download the home study program. We're also going to get into filling out the resource assessment, which is going to be part of that, choosing your investor profile, reviewing the state list, and then finding the list. And so we're going to quickly go through this process. That way we can get to the list and how to really dissect the tax sale list. So here's the home study program. You guys are going to receive it in PDF form. There's going to be the workshop guide. This is going to help you learn what's involved with the tax sale. So this is going to get into the basics. You know, we have probably some people on the line that have invested in tax liens or deeds before, but we probably have a lot of people on the line who have, you know, just studied it, learned about it, but maybe haven't purchased their first investment yet. And really, when it comes to tax lien and tax deed investing, I really want you guys to ask yourself a question. You know, is your money working for you? You know, right now, if you have some type of savings or some type of money set aside, squirreled away, is it working for you? You know, and if it's not, then you know, it's important, or it would be beneficial to you, obviously, to look into ways that to help it to where ways that you can make better money on your money. You know, if you have, let's say that you have some type of savings squirreled away, where you're making 0.5%, you know, maybe it's in some type of bank account. You know, your money would be making so much more money if it was making 18%. And there's ways that you can determine how long your money's going to be out. You know, I have investors that have over $1 million just to invest into tax lien certificates, or you know, students that I'm working with. And then I also have investors that, you know, don't have very much money. Single mom, you know, working 2 jobs, but she's scrolling away $100 each month. You know, $300. And every you know, 4 times a year, she purchases a $300 tax lien certificate, an over-the-counter tax lien in Florida, on a, you know, some type of good piece of valuable land, at least for a $300 investment. So maybe that, you know, that $300 investment got her a $30,000 building lot. Well, you know, she's only investing $300, what would that be, $1,200 a year? But that's what she's able to do right now. But that money that she is setting aside is earning, you know, 18%. And so, you know, it really doesn't matter where you get started and what your investment strategy is. You know, that's something that we're going to get into in the Quick Start Guide. It's going to help you talk about setting up your business. We're going to talk about retirement accounts. You know, just recently over the last 6 months or so, well, not even that, the last 3 months, we've started offering secondary tax liens to students on the website. We were able to partner up with a good friend, and they're one of a large hedge fund that purchases tax lien certificates, and we're able to offer these secondary market tax liens to our students on my website. In fact, I'm not going to get into a lot of detail, or maybe I'll show you a little bit about it later on if we still have time, but we recently just got some tax lien certificates in Florida on a mall property, and these tax liens are ready to be foreclosed on now. And so what happens when you have a tax lien that's ready to be foreclosed on? You in Florida, you fill out what's called a deed application with the county. You also pay up any additional tax liens that are on that property, so that you own all of the tax liens on the property. You're the only lien holder, and then the county will foreclose on that property and send it to the deed sale. Now, at the deed sale, either two things are going to happen. I guess I should take one step back and talk about is before the deed sale, the property owner can go ahead and pay you, pay back the county, which in turn pays you, and you're going to make 18% off your entire investment. So the money that you put in, also the additional roll-up or additional tax liens that you purchased. So you're going to own the entire, every lien against that property, and when it goes to the deed sale, either two things are going to happen. Either the property owner, not the property owner, either the property is going to be sold and purchased by an investor during the tax deed auction, or if they don't, you're going to acquire the property. And so with these Florida mall properties in Miami, investors are able to go ahead and purchase them, start the foreclosure process, immediately, have that property start to go through the foreclosure, and so within 6 months they're either going to make 18% on their money during that time frame, or they're going to get a great property. So there's lots of different strategies that are available depending on what your long-term goals are. What's the end game for you? Okay. Step 2. Now, as far as your guys' program that you're going to be receiving, in this quick start guide, we're going to go over self-directed accounts, setting up your business, as I mentioned. We're also in the state guide going to get into the resource assessment section and your investor profile section. And so with the resource assessment, what you're going to do is this is going to help you determine your available capital, your time, your willingness to travel. It's going to help you determine what your resources are. And you're going to use this information to help you determine what investor profile you'd like to work with. And so even if you just go through and maybe you don't write out the answers, you definitely can. It'll probably be more beneficial. But even if you went through and answered each one of those questions to yourself, read the information on the different assessments, that's going to help give you a better idea to pick an investor profile. So before you pick an investor profile, you need to kind of determine one thing beforehand. Are you looking to invest for yield or property ownership? Now, it could be both. You could be wanting to earn interest rate on some of your money, and you may be wanting to use some of your investments or some of your hard-earned dollars toward tax deed investing. That's really kind of the first question, because that's going to help you determine which type of strategy that's going to work, that's really going to work for what you're looking to do. Now, as far as investing for yield, you're looking to generate the highest interest rates possible. So you're looking to make high interest on your money. You're looking for a guaranteed investment. You're looking for a secured investment. With tax lien certificates, there's really not a more secure investment. First of all, you're backed by state law, and you're backed against real estate. There's one thing I know, we have 3 needs, food, water, and shelter. If we're investing in one of those, that's going to be a pretty good investment. And so with real estate, there's always going to be a need for shelter, and real estate's always going to have value. Land is always going to have value, and so investing in tax lien certificates or investing in property, if you're purchasing the right tax liens and purchasing the right property for the right dollar amount, then it's going to be really the very best investment you can find. With tax liens, you're going to earn a great interest rate, and in the chance you get a property, you got a property that you only paid, a few percent for, depending on the strategy. It's also going to help you build your retirement, and it takes a lot less time. With tax lien investing, you can invest tax liens very quickly. It's not going to take the type of research that tax deed investing does. So as far as investing for ownership, you're looking to replace your income. You want to generate lump sums of cash, so you want to do deals. You want to do flipping. That's a big keyword or word that everyone talks about: flipping homes, flipping property. That's essentially what you're doing with tax deed investing. You're just doing it for a better price than everyone else. All of these shows on TV that you see, they're all talking about going out and getting property, and they're getting property the traditional way. They're trying to find the very best or the lowest property, and lowballing and lowballing and lowballing until they get somebody that says yes. With tax deed investing, that the only thing you're going to be lowballing is you're going to be bidding against other people, but you're going to be able to acquire the property 95% or 99% of the time for a lower, better price than you would ever be able to do doing the traditional method. And so there's really not a better way to acquire real estate at a cheaper price than through tax deed investing. And if you're in a scenario where there's two competing bidders that bid up a property higher than you valued it, then you walk away. It's not worth it. There's always going to be another tax sale. That's the great thing about tax sale investing is there's always more property coming up for sale. And so, you can be careful on which properties you purchase. So step 3 is going to be your investor profiles. Now, you're going to have the profiles in the home study program. You're also going to have the profiles on the website. And if you go to the profile tab, it's going to go through the investor profile overview and the 8 different types of profiles. Now, I'm actually working on changing this up a little bit, and so when we, it's going to have a lot of the same, but I'm going to condense some and maybe eliminate a couple of them and add different strategies. So there's going to be different investor strategies, and so we're going to add a few, like the secondary market investor. You can see it number 8. We're going to look at an overage investor, and maybe a land type investor. So there's going to be some different investor profiles that we're going to narrow down. But until then, this is going to be a very good system for you to help determine what type of investment strategy you'd like to pursue. And then from there, what's the best states that you can start using that strategy in? So, we have the tax lien auction investor, the online tax lien investor, the over-the-counter tax lien investor, the tax deed auction investor, the pre-tax sale deeds, over-the-counter tax deeds, redemption deeds, and secondary market. And with each one of these investor profiles, it's going to let you know, what's required with this type of investment strategy. In addition to that, it's going to have a list of the states where you can start using that strategy. So once you've got that list of states, then you can go ahead and look to our state guides, which you're going to receive in the program. The program's a 5-course manual. It has over 750 pages. And so we're going to have the workshop manual. You're going to have the quick start guide. Then you're going to have the tax deed book, the tax lien book, profile state book, and then the redemption deed profile state book. And so they're going to have profiles on each one of the states with how they conduct their auction. Kind of getting ahead of myself. So here you're going to have this not only in book form but also on the website. You're going to have the state guides, and it's going to include the profile overview. How the state handles their auctions. It's going to get into the bidding information, the redemption periods, the foreclosure information, the auction dates, the county officials that you want to contact, and then also the county contact information within the book. And then on the website, we're going to have those profiles as well, along with the investor profiles on the profile tab. So you can go and click on any one of these profiles and review the information online as well. What this is going to allow you to do is to limit the amount of states. Take 50 states down to 10 states, down to 2 states, down to 1 state, down to 2 counties or whatever it is. You're going to eliminate all of those different areas till you find an area that's going to work for you. And that's one thing about tax lien and deed investing is, I talk to investors all the time that are purchasing in a county that I'd never even thought about working in before, or had never had, just had students that worked in that area or whatever. And so there's different areas in the country where there's good opportunities that can be had in tax lien and tax deed investing. And so, that may be in your own backyard, that may be across the country. And that's one thing that's changed over tax sale investing. I mean, when I first got started, there wasn't online auctions. Really, even when I first got started, and this was, back in 1999, they didn't even have the tax lien list online. You had to if you were interested in purchasing tax liens in Arizona, you had to drive down to Arizona. You had to go through all of their massive books on their tax lien certificates, and then you had to try to look up the property records. And now all we need to do is download the list. You can download the list off the websites, off our website, or you can go to the county as well. Once you've downloaded the list, then you're going to be able to take that list, use some of the strategies that we're going to talk about here in a minute, limit that list down, find some good investments, research the investments, and then purchase the tax lien or tax deed. And that just was never possible even 10 or 15 years ago. And so the internet's changed tax lien and deed investing. You could be sitting in California and purchasing tax deeds in Florida. You could even be out of country. We have some students that I work with and some investors that I work with that are out of country. They're from Canada, from Australia, from different areas, and they're doing tax lien or tax deed investing from across the world. And the reason is because they know they can earn a great interest rate return. They can earn a better return than they could normally get, and so it's a good investment strategy. And besides that, it's a good real estate market in many areas, especially when you're looking at the amount that you're purchasing the tax lien versus what its value, or the amount that you're purchasing the tax deed for. So your step 5 after looking at the state and the county guides is to review the auction calendar, the over-the-counter list, contact your local county, depending on whatever your strategy is, and you're going to find a tax sale list. Now, if you live in an area or if you want to attend an auction that only has, that only has an auction once a year, and that's not going to be for another year away, well, then you may want to look for a different area to get started with, because you want to find something that you can get started with now. That's really the most important thing, is to get started now. And so maybe you want to purchase tax deeds, but you live in a deed state and they just had their deed sale. And you want to purchase property within your own area. Well, maybe look at doing a short-term tax lien investment certificate that you can, that's at the end of its redemption period. That way your money's at least working money, and then you can participate in the tax deed sale next year. Get started with something now, because once you start into that process, it's going to give you some excitement. It's going to give you a little bit of courage as far as already going through the process, and that's going to make doing the next deal that much easier. Okay, so now we're going to get into researching the tax sale list. So after you've chosen your investor profile, after you've picked a state and a county, and then found a good tax sale list, what's going to be your next step? Well, the first step is going to be to bracket your investment, and to really determine what type of tax liens you'd like to purchase, what type of tax deeds you'd like to purchase. Then you're going to review the tax sale list. So for example, if you have $10,000 to invest, then you're not going to spend time looking at $20,000 tax liens, because you have $10,000 to invest. And so we're going to go through and talk about how to be able to do that through using the quick glance method, or the quick glance system of reviewing a tax sale list. And then we're going to get into how to research the investment. And so hopefully, after we've sent you out the program and you've gotten access to the website, you at least know how to go through, pick an investor profile, pick a state to get started with, and then actually go out there and start reviewing property. And that's going to be the most important thing, and that's what we're going to talk about at the end, and hopefully we'll have plenty of time to go online and review some upcoming tax sales and review some upcoming information uh, just right there on the internet, and go through this process of researching a tax lien certificate, go through the process of researching a tax deed. And review those county records, because reviewing county records is really going to be one of the most important things we do as tax lien and tax deed investors. So the first thing we're going to get into is the investment bracket system. What you're going to do is you're going to use this as just really an example or a guide to help you evaluate potential investments. It's going to help you set a criteria with tax lien brackets and tax deed brackets. And this isn't a complete science. As we go through, there could be exceptions to every one of these rules or every one of these brackets as far as what type of property is associated with this particular tax lien. You may find a tax lien on a property that's worth quite a bit more, than we've shown here. Or you may find a property with a tax lien on it that's worth almost as much as the property. And so that's really the key, and that's what's going to help you make good investments. I want you to make good investments. You make good investments, you're going to have success. And so as you go through and evaluate this information and use these tools as you evaluate your own list, this is going to help you to determine what's going to be a good tax lien certificate. And it's going to get to the point where, depending on what type of or investment strategy you're looking to do, you're going to be able to evaluate property very quickly. I mean, you can just look at the assessed value, the minimum bid, the address, the property records. You can completely evaluate a property very quickly on if it's going to be something that you're going to look at investing into. And then if it is, depending on the strategy, with the tax lien investing, you're going to do a little bit more research, but with tax deed investing, you're going to do a lot more research. And so let's go through and let's talk about these brackets. The first ones we're going to talk about is the tax lien bracket. And so the first thing you're going to look at is the minimum bid versus the assessed value. Now all tax sale lists are going to have the assessed value, which is okay, because once you've narrowed it down by the minimum bid, that as we go through and show you, then you can go ahead and review the assessed value, and that's going to help you determine, the minimum bid from the assessed value. So aside from providing the amount of the investment, the minimum bid, or that tax lien amount, is also going to be a reflection of the property's value. Usually tax liens are going to be for 1 year's worth of delinquent taxes, and so the higher the tax lien, usually the higher the property value. And so the tax lien is really the amount of 1 year's worth of delinquent taxes plus the penalties. Now, the amount of the tax lien is usually always going to be relative to the property value. So the higher the tax lien amount, the higher value of the property. And so really the key to purchasing good tax lien certificates is to invest in tax liens that have the highest assessed value for the lowest minimum bid amount. And so that's your traditional tax lien investing strategy. Now there is different strategies that you can employ if you're looking to acquire property. So if you're looking to acquire a tax lien, or acquire property through tax liens, then you may look for a tax lien that has maybe several years worth of tax liens on the property, or that way you can purchase all of those tax liens and have a higher bid to assessed value or bid to value ratio. So it really depends on your strategy. If you're just looking for interest rate returns, then you're going to look for the tax lien with the highest assessed value versus that minimum bid amount. But then again, if you're looking to acquire property, then that'll actually flip around a little bit. You're going to look for property that still have a good assessed value, but maybe have a higher bid, because those are properties that you may have a better chance of acquiring. If let's say there's a $100,000 home, and there's a $1,000 tax lien or a $2,000 tax lien on the property versus a $20,000 tax lien on the property. Well, $2,000 is going to be a lot easier for a property owner to come up with than $20,000 within a 6-month period of time, or within a 4-month period of time. And so, it's really going to be based on your strategy, but generally you want to make sure that the property has a good high assessed value versus the amount that you're purchasing, the tax lien, the lien amount. So how do you identify your bracket? Well, when you review a tax sale list, you're going to find that opening bid amount will vary. There's going to be tax lien certificates for $20, and there's going to be tax lien certificates for $200,000. It really just depends on the property and the list. And so that tax lien bid amount is always going to represent, or usually is going to represent, about 1 to 2% of the property's assessed value. So if we're looking at $1,000, that could be, it could be a property that's worth anywhere between 50 to 100. And there's some areas of the market where it's higher than that, some areas of the country where it's higher than that, and there's some areas that it's lower than that, but that's kind of the general rule. Now, as far as the brackets, they're going to help you determine the minimum to maximum cash you plan to invest per lien. And so those lien amounts can vary depending on your objective and goals. You may, and we're gonna I'll wait a second before I get into that, because we're gonna go into that. And so, depending on your investor profile and the capital you have available, this is going to help you determine an investment bracket to get started with, and it's going to give you at least a guide as you go through and start looking at lists. So once you've determined your investment bracket, then you can go ahead and start focusing on properties within that price range. And so the first thing we're going to look at this morning, is the investment brackets for tax lien certificates. Now, this isn't exactly a science. These prices can vary. We may find tax liens that are low dollar liens on incredibly high properties. You may find them flipped around, but this gives you a good idea of the type of properties. And then, of course, that can vary just depending on the market, but at least gives you something to think about as an investment bracket one. And so maybe that investment bracket one goes up in value a little bit because you're in a higher market, but these are still the properties you're going to find on the lower end, the mid-level end and the higher end. So with bracket number one, we're looking at tax liens between $10 to $500. Now, these properties have an assessed value between $500 to about $25,000. Now, as far as the type of properties on tax liens like this, you can find attached pieces of land. So maybe there's a single-family home, and their backyard is another building lot. That could be an attached piece of land. A lot of times you're going to find some of those lower dollar tax liens that are an attached land. Now, that doesn't necessarily mean that it's a bad investment. Depending on how much that tax lien is, usually the property owner is going to pay that tax lien off. This is where you're going to find timeshares, vacant land, mobile home lots. Sometimes you'll find some lower dollar building lots. Like maybe a home lot or something. Any type of property that's valued about 10 to 25,000, 5 to 10,000 is going to be within this tax lien bid amount. And so if you're looking at a $500 tax lien, you may be up at the higher end of that. You may be at the 25,000 value mark. If you're looking at a tax lien that's $100, well, you may be looking at a $5,000 property or $6,000 or $10,000 property. And so those are the type of properties you're going to find within that first tax lien bracket. Now, as far as the second bracket, these are tax liens with a value about $500 to about $1,000. Now, with these properties, you're going to have an assessed value range of about $25,000 to about $50,000. This is where you're going to find your vacant land, your building lots, your residential building lots. You're going to start to find some of your commercial building lots. You're going to find mobile homes with land. And then you're going to get into your lower dollar single family homes and your lower dollar condos. Kind of like the example that I showed earlier today. Those would be your your lower end of their single family home. It could maybe fit in investment bracket 3 a little bit at the beginning, but these properties are kind of right within both of these price ranges. These are where you're going to find. Now it is possible, I could say as well, that you could find single family homes within investment bracket number 1, $25,000, kind of around that. But those are usually going to be, the very end or the very lowest in type of real estate, home structures, as far as their value. And it's possible in a state like Florida that you might be able to find, $25,000, $30,000 single-family homes in one area of the state, but in another area of the state, the lowest home you could find would maybe be $150,000. It just completely depends on the market. Investment bracket number 3, these are tax liens that range in value about $1,000 to $2,500. They have an assessed value of about $50,000 to $100,000. These are going to be your more expensive residential lots, like a nice building lot within a golf community. In fact, this morning I was looking online at some of the online auctions in Florida, and I found a golf course for sale. I'll have to, if hopefully we have time, I can go through and show that to you. But I hadn't seen one of those before. At least it looks like the clubhouse, but the acreage makes it almost look like it's the entire golf course. So I'd have to do a little bit more research. But we can take a look at that. I should have saved that for the investment bracket number 6 that we're going to talk about. So as far as these, about 50,000 to 100, we're going to find, this is where you're going to start to find some valuable tracts of land. If you find a $70,000 piece of land, it's 5 acres in a nice, maybe it's commercial or in a high value residential, that's going to be a good property to look at. This is where you're going to get into your lower mid-value single-family homes, your condos, and you can also get into your lower value commercial structures. So maybe like a little office apartment or office condo, maybe a little type of shop, something like that. In a certain type of market, you can find those type of properties for $50,000 to $100,000 type of value with tax liens anywhere between $1,000 to $2,500. So investment bracket 4, these are for tax liens that are $2,500 to about $5,000. The assessed value on these properties range from about $100,000 to $200,000. These are going to be your single-family homes, your luxury condos. This is where you can start finding rental properties like duplexes, triplexes. You can find commercial condos, commercial building lots, and then you're going to get into your larger tracts of land. Your 10, 20 acres of prime real estate, prime land within a good area. Those kind of things go to tax lien auction all the time. You have an investor or somebody who's bought this prime piece of real estate located in a good area and hasn't sold it yet. Maybe they want to hold on to it and they don't have their money to pay the property taxes right now. They know that they have a time period. They know that they can have that tax and certificate, and they may say, I don't have the money right now, but as soon as this new deal comes in, I'll have the money. I'll pay off my property taxes then. I don't mind paying somebody that interest rate just to have a time to pay it back. And so you can find these type of properties, some of this land that has a high value. You find $150,000. If I find a $150,000 piece of land that's a prime piece of real estate, versus a $150,000 house, really in most scenarios, I would rather go with the land because you're not going to be worrying about some of the problems that you can have with homes. You're not going to be worrying about is the property occupied, is it vacant? Land is land, and so it's easier to evaluate. It's easier to sell, and so don't be afraid to look at land. The only thing we need to make sure is that it has value. If a good piece of land, in fact, I have investors that will only invest in land. They don't want to deal with any type of structure. All they look for is good, high-value land. Because if they acquire the land, they can sit on that property. They could turn around and flip the property. It gives them the same type of strategy, but without the baggage. In addition to that, who are the people that look for this type of land? Investors. And so they're going to be working with somebody who understands what the value is. Maybe they want to put a shopping mall there, or they want to put, custom single-family homes. It's going to be a great, usually you're going to be working with somebody who is within the business. You're not going to just be showing the home out to random strangers that are just coming in to look at it and check it out, versus a real estate investor drives by, knows what the land is, and makes an offer. Investment bracket number 5 is going to be tax liens that range in value of about $5,000 to $10,000. So with these tax liens, we're looking at an assessed value range from about $200,000 to $300,000. Now, as far as the properties on these type of tax liens, this is where you're going to get into your custom single-family homes. Your custom homes, because if we're looking at $200,000 to $300,000, I mean, it's all dependent on the market too, and so I'm just using these general markets because, I was looking at one of the auctions in California this year, and the cheapest single family homes that I could find were $400,000 or $500,000, and so it can completely be relative to the market. Yet on the other hand, there's some areas where a $200,000 home would practically get you a mansion, and so this is kind of to be used as a general rule. But the brackets, the prices could range. But the property categories are going to be complete with regardless of what market you're looking at. The first things we're going to find are those type of, is bracket number 1 type of properties, bracket number 2 type of properties. And so I guess what I'm saying is these tax lien bid amounts and these assessed values could change, but the property types from bracket to bracket are always going to stay the same. You're always going to find as you go up in price, from a low level single family home to a higher level, to a mid level, to a high level, to your custom home, to your mansion. You're going to find this goes up in value regardless of where that tax lien bid will vary, depending on the real estate within that area. So hopefully that makes sense. So with these type of tax liens, this is where we're going to find the custom single family homes. This is where you're going to start to find your commercial buildings, so maybe a small office complex. You're also going to get into your multifamily residentials, your apartment buildings, your prime commercial land, commercial land within a prime area. This is where you're going to find it within that $200,000 to $300,000 price range. Your large tracts of land, 20, 40 acres, and so you're going to find a lot of your nicer homes that may be within this price range. Bracket number 6 is $10,000 plus, and these are tax liens that value anywhere between $300,000 to $100,000 to $1 million plus. And guys, there's tax liens out there that are hundreds and hundreds of thousands of dollars. So they completely range. They can completely range in what they cost, and so when we put that $10,000 plus, that can really go 20, 30, 50,000, 100,000, and quite a bit higher than that. I mean, even looking at $100,000, if you were to, there's lots of. In fact, we're looking at deals right now where there's $100,000 worth of tax liens on a property, so maybe the $100,000 is divided over 4 or 5 years worth of property taxes, and so maybe it's $20,000 a year, but you're looking at foreclosing on a property that's worth $500,000. So there's still a huge range of profit that could be had on that property, even though you're spending $100,000 on tax liens. And so with these type of properties, these are where you're going to find your custom homes, your estates, and these do occasionally come up for auction. I'll bet every week some type of nice property like an estate is sold as some type of tax sale. This is where you're going to find your more expensive commercial buildings. I've seen stores, not like a Kmart, but Kmart type buildings go up for auction. We've seen almost every type of real estate that's available, from islands to beachfront property to condos to high rises, all of those different types of properties have come up at tax deed for sale, tax deed auctions or tax lien auctions before. So there's really a wide range of type of property that can go to tax deed auction or tax lien auction. With tax liens, the lien holder has a redemption period time frame to pay that off. So they're just running late as far as what they're thinking. We'll get this paid off, and when they do, you're going to make your interest rate return. This is where you're going to get your residential commercial development properties, your large 80-acre types of tracts of land within these type of different tax lien brackets. So that'll hopefully give you at least a little bit of a little idea on how to invest in tax lien certificates, and also how to bracket those tax liens. And so even though these bid amounts and these assessed values may change, the properties are going to essentially stay the same. At the lower end, you're going to find investment bracket type of 1 properties. As you move up, you're going to find investment bracket 2, investment bracket 3, all the way to 6 on the different types of properties as they go up in price range. So after reviewing these different investment brackets, you're going to want to choose a bracket based on your resources and objectives. Now, once you've chosen a bracket, so once you've decided, well, I'm going to invest in bracket number 2, that's kind of where that's where my dollar figure is, my investment capital, my money I've squirreled away is that's about what I have to invest. Then you're going to go ahead and pick a bracket to get started with. Now, once you've chosen that bracket, you can start reviewing tax liens, tax deeds, investment that fit within that bracket. So if you have $10,000 to invest, then you're going to look at tax lien certificates up to $10,000 or tax deeds up to $10,000. You're not going to spend time wasting looking at property that with a higher bracket. You're not, if you have $10,000 to invest, you're not going to spend time looking at $20,000 properties because that's something you can't purchase at this time. You're going to look for properties within your investment bracket. It really doesn't matter what investment bracket you choose to get started with, as long as the tax lien has a good bid to value ratio. So if you're like one of my students, the single family mom, who has $300 every 3 months to invest, she's going to look for tax liens that have a good bid to value ratio. Or for that $300, she's getting a good building lot that's worth $25,000 or $30,000. That way her money's secured against a good property. Even though that may not be, even though it may only be $300, every 3 months, $100 a month essentially. She waits up till she gets $300 and then invest into the next tax liens. That's the way she can purchase 4 tax liens a year. Well, if she does this for 10 years, with her money constantly earning money, it's gonna grow for her at a better rate than she could do it anywhere else. And also, as she uses these strategies in her investment life, it's only going to help other areas of her life as well. And she has a commitment to increase that amount, to hopefully be able to double it, by next year, making a higher salary with their jobs, hoping to be able to, instead of investing $200 a month. And so we're all going to start at a different level. The only thing that's important is get started. Start because it's a way not only to start saving your money, but it's also a way to start earning a better interest rate return than you could get doing anything else. I mean, if you can make a better interest rate return during tax liens than you can make anything else, or anything that's safe, or anything that you know about, then it's going to be a good strategy for you to pursue. So as far as the investment brackets, this is kind of an example, and this is something to think about as you go through and determine what investment brackets you want to start with. Investor Bob has $10,000 to invest. He'd like to invest in tax liens. He can use that $10,000 to invest in several different ways. He can, buy 1 tax lien for $10,000. He has $10,000. He buys 1 tax lien for $10,000. He's done. He could purchase 2 tax liens at $5,000 a piece. He could purchase 4, 5, 10 down the line. So with 5 tax liens, he'd purchase 5 tax liens at $2,000 a piece. He can divide up that money between tax and certificates any way that he wants, and he could purchase maybe one tax lien for $5,000 and then 2 tax liens for $2,500, and that's still going to come up to $10,000. It's just really going to be based on your strategy, your time. You may want to just purchase the very best tax liens you can that add up to $10,000. You may just want to purchase one tax lien and and only worry about that one property a year. So it really doesn't matter as far as where those brackets are. The only thing that's important is that you have that good bid to value ratio. Whatever you're paying for the tax lien, make sure it has a good value. So here's also a few tips to think about as you're reviewing these brackets and reviewing and bracketing tax liens as you go through and review list. If you have limited time, then choosing a higher bracket will save you time in transaction research, and we kind of already talked about that. If you're interested in acquiring property, then maybe spreading your capital in lower bracket tax liens will increase your chance of the lien going to foreclosure, especially if you're looking at building lots or land, something like that. And so maybe you can purchase one tax. You have $5,000. You can purchase one tax lien for $5,000 on a single-family home. Well, chances are that tax lien is going to get paid off because the property owner is not going to want to lose their home. That's worth 200 grand. But then on the other hand, if you were to take that same $5,000 and spread it out over 5 building lots, there's a chance you may get one of those properties, and then you turn around and you flip it and you make a good profit. And so, and then there's additional strategies like I talked about earlier, where you purchase tax liens against a property that has several tax liens against it. That way, you increase that assessed value. Increase that minimum bid versus the assessed value, and so you have a higher chance of acquiring property. So there's different strategies even within tax lien investing, within tax deed investing. There's going to be different strategies that you can pursue, and so the rule of thumb, is usually you want to have the lowest minimum bid amount versus the highest assessed value. But with tax lien investing, you can kind of flip that on its head in some ways, where you'll purchase a tax lien with a little bit higher opening bid amount, but you're doing it because it's going to increase the chance of you acquiring the property, and there's still plenty of profit that you can have that be made between those different price points. Also, occasionally the tax will be issued on a property for only a portion of the year's taxes. And so this happens when a property only pays part of the yearly taxes. So maybe they paid, they pay 4 quarters a year. Maybe they paid all but 1 quarter, or maybe they, somehow sent in a check that they thought was for a lower amount. So maybe they thought their tax bill was $900 because they looked online and that's what it was last year, but maybe it's gone up to $1,000 now, and so there's additional $100 that is owed. These tax liens are great to purchase because they're going to have a very high bid to value ratio. So there's a good chance, even a higher chance than normal. They're almost guaranteed to return, and you make your interest rate return off the property. Also, 90% of the time, 99% of the time, the minimum bid will be worth just worth 1 year of property taxes. But there's occasionally, especially looking over the counter list, where a property may have several year tax liens issued on that amount. So as you're going through and looking at a list, there may be an amount as far as the minimum bid. It's possible, if it looks kind of high, there's a good possibility that there's several tax liens within that amount. And so you may research it and find out, well, yes, that's 2010, 2009, 2008, and 2007. That's the reason it looks high, is because there's several tax liens issued against this property. So when you purchase that over-the-counter tax lien, you're essentially paying off all the property taxes on the property. Also, as you're going through and reviewing, a property has an address, it may have building improvements. And there's so many online resources that we can use as investors to quickly research and see, what the property looks like. I mean, even using Google Maps is a great tool. And you can also see when that picture was taken. You'll see that maybe as I was looking at property yesterday, I saw some property where, the picture had been taken 2 months ago. And then there was other areas or other streets, property I was looking at where it may be a year or two old. And so at least that's going to give you an idea of when this picture was taken and what the property looked like at that time. And you can look up, you can look up a property in a matter of 10 seconds. We can look up a property and see, a street side view of the property. We can go up and down the neighborhood and see what the neighborhood looks like. We can get a pretty good idea of the property without ever flying out or reviewing the property. As we review the county records, as we go through and review the online resources, at least we're going to have an idea of what this property is. So let's get into talk about bracketing tax deeds real quickly. For those investors who are looking to acquire property, there's no better investment strategy than tax deeds. Tax deed investment brackets can assist you in deciding what type of properties you'd like to purchase. Tax deed opening bids can start about 10% of the market value, and a good bidding range is from 10 to, we recommend staying below 50%. The only way that we recommend spending more than 50% is if you're really looking at a high value dollar property. For example, let's say that there's $1 million property and you're a big time investor. You may spend $500,000 on it because you know that there's going to be $500,000 of room for profit, versus an investor who's purchasing a property that's worth $40,000. There's a big difference between paying $10,000 for the property versus paying $20,000 for the property. And so, hopefully that makes sense. As you're looking at each one of these properties, there's going to be certain scenarios where maybe you're willing to pay higher than that. And as you look at lower dollar properties, that margin needs to be higher so that you have more room in case you need to wholesale it or you need to sell it quickly. You want to have plenty of room where you can lower the price but still make a good profit. So let's get into the tax deed investment brackets. So bracket number 1 are tax deeds between $100 to $1,000. Guys, there's property out there that you can purchase that are, that are tax deeds just like this, and you can actually make a profit on these properties. There's many investors out there who focus on nothing but low dollar land, and then turn around and flip it for profit. They're purchasing $500 lots. Purchase lots for $500 they can turn around and sell for $3,000 or $5,000 because they're looking to make a quick return on these properties. So these are tax deeds that range anywhere between $100 to $1,000. They have a value between $1,000 to about $10,000. This is where you're going to find the attached land. Usually we don't recommend purchasing attached land unless you've already made a deal with the property owner. We just think it's too much work. It's too much, there's just really too much work involved unless you have an agreement with the property owner. So if you, talk to the property owner, say, hey, I'm looking at this piece of property. Would you be willing to buy it from me? I'll pick it up for, I'm going to buy it for this amount. Would you buy it to me from this amount? And you're gonna have to be reasonable with him. The best way is to just be upfront about it. And I've actually done this before. I purchased a piece of attached land at an auction just because it was $250, and I figured, what the heck, it's got two different owners, and one of those owners is going to want to pick up this piece of land between both of their properties. And it really was just one of those type of strips of land that I usually recommend not getting. But I figured it was worth the risk because it was, wide enough, it was 12, 15 feet, by the length of the property on either side of the property. I figured, it's just worth it for $200, $250 to purchase this and see if one of the property owners wanted to buy it, and was able to work out a deal where we were able to sell it to him for $1,000. So, we didn't make a massive profit on that property, but we were able to purchase a property for a low dollar cost, and we were able to make a profit on it, and the property owner was happy. We were upfront with what we did, and it was worth it for him to have that extra part of his property. So as far as attached land, that's kind of my piece on that. As far as what you're going to look for, don't purchase attached land unless with tax lien it's a little bit different. With tax lien, usually they're going to pay it off. But if it's already gone to tax deed, that means that the property owner, probably doesn't want it, or at least not willing to pay for it. With taxing certificates, if they haven't went to tax deed auction, good chances, 95% of those, 99% of those will pay off. But when it's already gone to the deed sale, it's kind of past that point where the other property owner has not stepped in. So, they're not going to be as motivated to sell it unless they weren't aware of it. This is where you're going to find your timeshare properties, your vacant land, your mobile home lots. You'll start to find your lower dollar residential lots. So there'll be some areas of the country where, a building lot within that community ranges, 8 to 10 grand. You can find those type of building lots. You can find different types of land, property, vacant land. And with vacant land, what you want to make sure, especially from a tax deed perspective, is that it's sellable, that you could turn around and sell the property. So if it's unbuildable and it's a piece of vacant land, you better have some type of strategy as far as the property is concerned, something you can do with it. Otherwise, you may be stuck with a piece of land that you can't do anything with. And so always make sure that the property that you purchase has some type of use and has different types of options to sell the property. And as you go through, it's important to make sure that we're looking at the value versus the amount that we're paying. Investment bracket 2 are going to be tax deeds for the value between $1,000 to about $2,500. These are tax liens that have an assessed value of about $10,000 to $25,000. Now these type of properties are going to be vacant land. We're going to be looking at we're going to start looking at residential building lots. We're going to start looking at mobile home with land. Sometimes you'll find mobile homes with the land, a mobile home on their own piece of land, starting at the higher range of this property bracket. You're going to find vacation mountain lots, lower value structures. So you may start to find some of your lower price single family homes within this bracket price. You're also going to find your tracts of land, your larger tracts, 1 acre, 2 acre, 5 acres within this price range. Bracket number 3 are going to have tax deeds that have a value of about $2,500 to $5,000. They're going to have an assessed value that ranges from about $25,000 to $50,000. These are where you're going to start to find your residential building lots. Your commercial, you're going to start to find your lower dollar commercial lots, your larger tracts of land, 5 to 10 acres. Then you're going to also start to get into your lower value single family dollar homes, your lower value condo, your lower value structured properties, your commercial structured properties. In some markets. And so this is where you're going to start seeing that lower end $50,000 home price. As I mentioned, that the tax deed that we purchased recently in Florida started at $5,000, ended at $10,000, but would start at that $5,000 mark. We were just kind of between these bracket number 3 and bracket number 4. Okay. Investment bracket number 5 are going to be tax deeds that range between $5,000 to $10,000. These are going to have assessed value between $50,000 to $100,000. This is where we're going to get into our residential commercial building lots, or the higher valued ones, ones in higher value markets. Many types of valuable pieces of land, so whether that be a residential building lot, a large vacant lot, maybe a commercial type of property. This is where you're going to start getting into your low mid-level single family homes. Your condominiums are going to be within this price range, and then you may find some of the smaller commercial condos. And in some markets, you may find smaller type of commercial buildings. So maybe a small shop or something like that you can start finding within this price range. Bracket number 5 are going to have tax deeds that range in price between $10,000 to about $25,000. These are going to have an assessed value between $100 to about $250. And so as far as the property types with these are going to be your single family homes, your luxury condos. You're going to get into your duplexes, your triplexes, your commercial condos, your commercial building lots, and your larger tracts of land. So, really within that $10,000 to $25,000 range, that's where you're going to find some of your nicer single-family homes. Bracket number 5 are going to be tax deeds that have a $25,000 up. And so this is also generally a rule for the opening bid amount. The opening bid amount may start at $10,000 and go up and maybe bid up to $20,000. And that may be a $100,000 property, that may be a $150,000 property. It's going to fit somewhere within that as a general guideline. So with your bracket number 6, $25,000 type plus properties, these properties can go from $200,000 up to millions of dollars on the property. These are where you're going to get into your estate type properties, your commercial buildings, your ranches, your farms, your multifamily residentials, your apartment buildings, and then also your residential and commercial development will fit within this $25,000 plus range. And that can go from $25,000 up to $500,000, completely depending on the auction and the property. Okay. Let me go through and look at some of these different questions. We got quite a few questions. Okay, let me see if I can answer a couple questions. We've got way more than I could probably get to. I had a question about the Miami Mill property. The properties on these, the tax liens that we have are about, they go anywhere from $30,000 up to $30,000. I mean, $3,000 up to $30,000. But the things with these tax lien certificates is you're going to have to pay that roll up. And so these tax liens, we talked to, I guess I should go back, and the question was is they noticed the brochure that's available to you guys about the Miami Mall properties, these tax lien certificates that are available in the secondary market, and what is the cost of the tax lien. The very lowest ones are about $3,000, and they go up to $30,000. But with these tax lien certificates within this particular mall, we're able to get a large group of them from an investor, well, really from the bank, but the investor foreclosed on these properties, and so these are just a large group of these tax lien certificates on these great commercial pieces of property. And so with these, they're going to start about $30,000 to $30,000 for the 1 year's worth of delinquent taxes, but you're also going to have to pay the roll-up. And so the roll-up is going to start about $15,000 or so. And so really these are about $20,000 plus tax lien certificates, as far as what we're able to do is assign you that first year's worth, that first year tax lien. So you're going to have the very first position lien, and then you're going to have to pay those delinquent taxes so that you can fill out the tax deed application and foreclose on the property. So these are a little bit higher dollar tax lien certificates. We do have tax liens from other areas that are less expensive than that. But as far as the tax lien, you're only looking at $3,000, but you're going to have to pay that roll up. And so there may be 4 additional years worth of tax lien certificates on this property, which is going to take that price up from the $3,000 that you're purchasing for the first year position lien, and that's the exact value that the tax lien is now. That's what's currently owed to the county. plus the additional roll-up. Now, the advantage, of course, is that you're going to be making 18% because as you file the tax deed application, that gives you first position on the property, really the only position. So you're going to earn 18% off of any tax liens that you purchase. So if you purchase that, that first year lien plus you pay off the delinquent taxes, you're going to make any of those. You're going to make 18% off any of those additional tax liens that you purchased. If you're interested in it, go ahead and go to the website, and we have a video about secondary market tax liens, and then we also have a profile section there that you can fill out your information, submit it, and then I can give you a call and talk to you a little bit about it more one-on-one. So as far as the secondary tax liens, that's a little bit about them. We had a question. Is there going to be a replay of the webinar? Yes, we are recording it, so there will be a replay. Okay, just going through them. Just going to see if we can answer any more of them. Okay, if you end up getting a property through a $300 tax lien, is there any additional cost to me to get clear title on the property? There could be additional cost, really depending on what your strategy is. If you won't, purchase a $300 tax lien on a $25,000 lot, you're going to acquire the lot. You're going to have a tax deed title on the property. You can sell the property with a tax deed title. Essentially, it's a quick claim deed. So you're going to get a quick claim deed versus a warranty deed. Now you can still sell a quick claim deed. You're just going to wholesale it versus getting the high market value. So if you acquired a property with a $300 tax lien, you have two strategies at that point. You can either wait 4 years, and after 4 years, you're going to receive 100% clean title. You're going to receive a warranty deed. You can go through the quiet title process in Florida, where you're essentially taking the property before the court, proving that you own the property through purchasing of the tax deed sale, and the judge will issue a quiet title on the property, which essentially means that you're going to receive a warranty deed. So if you're looking to get top dollar, then you would go through that quiet title process, and there is going to be a cost to that. If you're looking to wholesale the property, then once you've acquired the property, maybe it's worth 25, you turn around and you purchased it for 300, you sell it for 10 grand. You just get rid of the property quickly, you make a profit. And so there can be cost additional than the amount that you paid. And then also, of course, if there's additional tax liens on the property, you're going to have to pay off those additional tax liens before you foreclose on the property. So, if you purchase the one at $300 lien and there's 2 other tax liens on the property for $300, then when you go to foreclose, you're going to pay that $300 plus you're going to pay the other tax liens, that $300. So you're going to pay an additional $600 so that you own all the tax liens on the property. And so if you're purchasing over-the-counter tax liens, it's always a good idea to go and see how many years delinquents are on the property. That way you can also take that into consideration when you're purchasing the tax lien. And so if you look at a tax lien and it has 4 years worth of delinquent taxes, and that increases the property, the total minimum cost as far as the lien amount on the property higher than you'd like to higher than you think it's worth, then you wouldn't invest in that investment. If you can look and say, if we're looking at a $10,000 property and there's a $300 lien on it, is $300 going to be a good investment to turn around and acquire a $10,000 property? Well, I would say it is. Even if you only make 5 or 6 grand on it, it's still going to be a good investment. And if there's 3 other tax liens on it that are $300 each, $900, so you're looking at $1,200 for a $10,000 property, I would still say that's a good bid to value ratio. You're looking at 12%, but at that point you may say, well, no, I don't. Either I don't have those funds, so I need to avoid that, or I do have those funds, and it's going to be a good investment for me to push this property to foreclosure. You also may get some other tax. You could just also sit on the tax lien certificate and wait until the life of the lien. You don't want to go longer than the life of the lien. There's a certain period of time that tax liens have before they can be foreclosed. On Florida, you can foreclose in 2 years, but you need to foreclose by 7 years. So you have a 2-year period that you can start that foreclosure process, and you need to start it by 7 years. In Connecticut, it's 15 years by the time you need to start it. So they have a 1-year redemption period in Connecticut, but you need to start the foreclosure process by 15 years. And so that's what's called the life of the lien. And so as you go through and look at different investments, you want to be able to look at the total roll-up amount of the tax lien certificate and take that into consideration when purchasing over-the-counter tax liens. Usually your tax lien at auction, it may be a first-year lien, you may be purchasing a second-year lien, and that person that has the first-year lien is going to have foreclosure rights before you. That's the reason with these mill condos, they have the first position foreclosure right, because they are the first year that there was a tax lien on the property. So they have the first right to foreclose, and that's the reason, with these tax lien certificates, you have to be in a position to be able to pay off those additional delinquent taxes so that you can own all of the tax liens on the property and force the foreclosure. And as far as the foreclosure, it's not really something you need to worry about. In Florida, what happens is you file a tax deed application. They send the property to a tax deed sale. The tax deed sale, they're either going to sell the property, or you're going to, and if they sell the property, you're going to make your interest rate, or you're going to acquire the property. So let's get back into tax deeds. There's still quite a few more questions I'm not able to answer. I'll try to get to them and answer them as I can. As much as possible. If I'm not able to, create a video or send you an email, and we'll try to answer them again here at the end of the webinar. But we've only got 30 minutes left, and we got a ton of information, so I got to cruise. I'm sorry, I start to get long-winded sometimes. So let's get back into some tax deeds. The bidding is going to start at that minimum bid amount and then bid up in price until the final bid is established. Most tax deeds are going to sell anywhere between 10 to 40% of the market value. Tax deeds can be purchased all over the country, and many states have over-the-counter tax deeds available. So let's get into the quick glance system. This is one of the easiest ways to narrow your selection using what we call the quick glance method. Now, the quick glance method or system is a process of selecting tax liens or deeds that fit a criteria and disregarding the rest. And so what essentially we're doing is we're using the information that's available on the list. As we're going through and reviewing that list, we're using that information to determine which tax liens we're going to be interested in, which tax deeds we want to research. And we're just going to use them. The first thing we're going to use is the minimum bid amount. We're going to use that minimum bid amount because the minimum bid amount is going to be a reflection of the property value. If there is assessed value on the list, and not all lists are going to have them, but if it does have them, we're going to use that as an additional tool. So if there's a minimum bid amount and there's not the assessed value or the address, then we're just going to use that minimum bid amount. If there's a minimum bid amount and the assessed value, then we're going to use both of those. We're going to look at that minimum bid amount, $100 tax lien. What's the assessed value? Well, it's worth $10,000, or one, whatever those numbers would be. $1,000 tax lien, what the property is worth, it's worth $100,000, whatever. We're looking at that minimum bid amount versus the assessed value. And then also, if we add in an address, then we'll be able to see if the property has some type of address. If it does have an address, that's going to give us a tool, at least an idea that it may be a structured property. And if it's not a structured property, at least you can drive to it. It's not going to be some landlocked piece of vacant land in the middle of nowhere. There is some type of address, so we can go to it. And then there could also be additional things in that list that help us determine it. Maybe it says structure, non-structure. Maybe it has an acreage. But the three consistent things, the first thing that almost 99% of lists are going to have is the minimum bid amount. And then we're going to use these other tools if they're available as we research and go through the tax sale list to determine tax liens or deeds that we want to invest into. So the minimum bid amount, or the lien amount, is really the first category that we're going to use to narrow down a selection of potential investments. So the first and obvious reason is our budget. Why spend time looking at tax liens or deeds that you can't afford? You could, if you have time, or if you want to, you could quickly glance at some of them just to get an idea of what's out there. But you don't want to spend serious time researching a $20,000 tax deed if you only have $10,000 to invest. You want to spend that time researching properties that fit within your budget. And as you use this minimum bid amount, it's going to be the best way to weed out good investments from those you want to avoid. It's also going to almost be a reflection of the property's value. So the higher the minimum bid amount, the more valuable the property is going to be. And so really the only exception to this is if there's a tax lien that represents multiple years worth of tax liens, like we talked about, or there's additional roll-up cost involved. So let's quickly take a look at the list. As an example, this investor has $10,000 to invest. Now let's say this tax sale list is more than 200 properties. There's more than 200 properties on this list. Instead of researching every property on the list, the investor is going to scan the list looking for properties that fit within his price range. So if this investor has $10,000 to invest, then they can automatically eliminate any tax deeds that go above the opening bid amount. And so in addition to that, if they're looking for, let's say that they're looking for the very best property they can get for their investment amount, then they're going to look for probably properties that start anywhere between $4,000 to $5,000 and then go up to $10,000. So we would maybe look at this $7,900 property, this $8,700, this $5,000, but we would eliminate this $10,000. We may look at this $5,000 property, we would eliminate the $7,000. We'd eliminate the $2,000. We'd eliminate the $11,000. We'd probably eliminate this $4,000, $29,000. And so we would look for tax liens in the mid to higher range of our opening bid amount if we were looking for tax deed investments. With tax lien investments, a little bit different because you can break that up depending on the property. You may invest one $10,000 tax lien, or you may split that up and invest into two $5,000 tax liens. But this opening bid amount is usually always going to be a reflection of the property's value. So the tax lien certificate or the tax deed opening bid amount that starts at $17,000 is probably going to be a more expensive and nicer property than the tax lien that starts out, of the tax deed that starts out at $2,900. They both may be great properties and have good bid to value ratios, but obviously usually the one with the higher opening bid amount is going to have a higher value. So if we look at this list, we can see that there's going to be tax liens that fit within $1,000 to $0 to $1,000. If we were to go ahead and narrow down this list, then we would go ahead and delete or disregard the tax liens that go above and go below our investment amount. So if we wanted to invest into tax liens that range anywhere between $1,000 to $5,000, and eliminate any tax liens that go from that are under $1,000 and any ones that are above $5,000, then we can go ahead and scan the list looking for properties that fit within the price range. So if we're investing between $1,000 to $5,000 in tax liens, then we could look at some of these tax liens that are in the blue. Tax liens, if we had under $5,000, then we would eliminate any of these tax liens that go above that amount. And because we're looking for the very best tax lien for our money, then we can go ahead and eliminate any tax liens that go below that amount. And so really our objective is to narrow down this list to a more manageable number of investments. In fact, there's sometimes when I'm looking at a list, and let's say I'm using an Excel file, I'll actually delete all of the tax liens or the property investments that go below and above the price range that I'm looking at. And so I may take a list down, and I maybe even be kind of specific. Let's say I'm looking at a tax sale list, and I may eliminate that down for properties that are around 10 to 15 grand. So I can eliminate any tax liens or deeds that go below that, any tax liens or deeds that go above that, and now I have a pretty specific group of tax liens or tax deeds to review within a certain price range. I can start reviewing those properties on the county website and make my decision, as I go through and research each one of those properties. So once we've looked at the minimum bid amount, then we can look at the assessed value. The assessed value is the value the county is assigned to the property by the county assessor. Now, assessed values on tax sale use can be used as a guideline for property values. And so even though the assessed value isn't always going to be what the property value is, it at least gives us an indication if the property has value. The assessed value can range anywhere between 30 up to 80%, 100% of the property's value. But usually, because the assessed value is not going to be based on the property value, it's going to be based on a combination of the county's budget versus the combined real estate value in property, and then using that to determine the property tax rate. It's not always going to be a direct reflection of the property's value. But if I see a property that has a high assessed value or higher assessed value, I at least have an indication that this property has some type of value. And then I can also look at that minimum bid amount. So I can look at that minimum bid amount. Let's say I was looking at this first property and it had a $5,000 opening bid on a $74,000 property. I could say, oh, well, that has a good bid to value ratio. I'm going to go ahead and research more into that property. The assessed values are going to be assigned by the county assessor. We've already covered that. So let's get into the assessed value example. If a tax deed has a minimum bid amount of $7,000 and assessed value of $70,000, then that has a 10% bid to value ratio. So we can just kind of, use that as a guideline or an idea when we're looking at the bid amount versus the assessed value. So, a $7,000 opening bid has assessed value on a property $70,000, we're looking at 10%. Now, if the minimum bid for that property was 14%, then that bid to value ratio would double to 20%. Kind of common sense, but as we're going through and looking lists, we're going to use these tools to evaluate different properties. The lower percentage, the better the investment. We can also use the property address. There's many tax sale lists that will include the property address. The physical address can be very helpful to us. First thing we can do is we can narrow down the selection of potential investments. So if we see a tax deed that one of them has they're both $10,000. One of them has an address, one of them doesn't have an address, and we're looking for properties that have structured. We're gonna go ahead and look at the first property and disregard the second one that doesn't have an address. Also, that physical address can be used to determine the property's location and value. I can go ahead and use that address on Google Maps and pull up a street side photo of the property. I can use that address to research the property and see if it has any past sales, what estimated value websites like Zillow and Yahoo Real Estate and websites like that say the property is valued at. So that address can be a tool that we can use very quickly. In fact, if I'm looking at some type of online list, like this is an example that we're looking at right here, is actually a Florida online list. I can see the opening bid amount, I can see the assessed value, I can see the address, the parcel ID, the certificate number. Now, what's real important to me are I guess 4 things, but 3 things are the first thing I'm going to look at. I'm going to go ahead and look at that opening bid amount, $4,000. Okay. Then the next thing I'm going to look at is that address. Well, actually, the next thing I'm going to look at is the assessed value. So, $42,000. Well, that has about 10% bid to value ratio. And so I may be interested in looking into this property. If the opening bid amount and that assessed value looks good, then I'll go ahead and click on this parcel ID and pull up the property record and look more into the property. I can also take that address. So if I, click here, pull up the property record, the property looks like it's a nice lower dollar single family home, looks clean. Then I can go ahead and take that address and go research it on, on some of the online searches. We can search the address and look at it Google Maps. We can go ahead and check out the property on Zillow and increase my information on this property. If from there it still looks like a good investment, then I can continue to do due diligence and do more research on the property. So the physical address, it's going to be useful for us for narrowing down the investments. And we already talked about that. So let's go ahead and get into researching the county website. So the first thing you're going to do, so we've picked our investor profile, we've looked at the states, we picked a state, we found a list, we've went through and we've narrowed down that list, we've bracketed the list. Now we want to start researching the county. Now we want to start researching the records and find out what, what's the information on each one of these properties. Well, the first thing we're going to do is we're going to go to NACO.org. This is the National Association of Counties. If you've been on a webinar with me before, you know I talk about it just because it's one of the best websites to use to review the county websites. Once you go to NACO.org, you can click on the county websites and click on any of the states to have a list of all of the county websites. It's a free service, it's available. So that's the first step you're going to do unless you already know the county's website. So once we go to NACO.org, we click on a state, we click on a county, we click on the county website, it's going to pull up the county website. Really the key for us as investors to be successful is our ability to navigate county websites. It may not be easy for you the first time you do it. In fact, I go to new county, I've searched probably almost every county website, if not every county website within the entire country. I think that I have clicked on every website on NACO, so I've been to every one that they had available at one time or another. And there's county websites that it takes me a while to find the information I'm looking for. But generally, as you get more proficient going and researching one county website and then researching another county website, you're going to find that there's lots of general information, and there's going to be tools and strategies that you use in navigating the website that you're going to use from one website to the next. And so your ability to go through and research county websites, research property records, navigate county websites, work with the county, this is going to be key in you being a successful tax lien and deed investor. Because the county websites are going to contain the information we need. They're going to have the tax information, the property tax information, the property data, and the property records like the maps, all of the property information, the sold information. They may have photos of the property. They're going to have the auction information, the auction list information. They're really going to have everything that we need, or at least a good portion of it, the general portion of what we need to find out more about the property. We're going to, go to a website to find the information about the tax sale or in the tax sale list. Once we get that tax sale list, we may go to another division within the county to research the properties on that list. Once we've researched the properties on that list, then we may actually go to a different county that handles the sale, or a different department. It may be the same department. It just really depends on the individual state. But either way, the ability to go through and research these county websites is what's going to prepare us for participating in the online auction, because we're going to understand everything we need to know about how the county conducts this auction by reviewing that information, and then also we're going to review the county record information. So as far as researching county websites, there's going to be some different tools that you're going to use. Many times they're going to have a search bar or search tab that you can click in keywords. You can click in treasurer. You can click in tax collector and be able to pull up the website, the individual county or department websites that way. You can also many times click on the department's head. There may be information underneath county or government. The treasurer may be part of the government county, so it may be underneath a different department. But really what we're going to do is we're going to be looking for a couple of different departments in most scenarios. The first thing we're going to be looking for, let's go ahead and go to the next slide. The first thing we're going to look for is the county treasurer. It may be called a different name, maybe the tax collector. It could be the financial department. It's whoever handles the property taxes. Whoever handles that property taxes is who the first department we're going to look for, because they're going to have the information about the tax sale list. Let's say that the treasurer, the tax collector, doesn't handle the actual auction. They're going to at least have the information to be able to point you in the direction of who handles the auction. For example, like Florida, the tax collector handles the tax lien auctions, but the clerk of court actually handles the tax deed auctions. But if we were going to the tax collector, they would have information that would refer us over to the clerk of court. And so this is the first area that you're going to find as you're looking into a new county. They're going to have the information about the sale, the list that may be available. We also have the ability on most county websites to research the past tax records. So if we're researching an over-the-counter list and we want to find out how many delinquent tax liens are on this property, we can go ahead and look up in the tax records and see exactly how many tax liens are on the property. So the treasurer is the person that handles the auction. So this is something that they do for their job. They handle the tax auction. They handle putting together the tax sale list. So, it really just makes sense that you have some type, if you're investing within that county, you start building some type of relationship with these county officials. As you get better relationship with them, it's only going to be that much helpful in the process of them going through and helping you with answering your questions, pointing you in the right direction, maybe giving you inside tips. All of this is part of the process of becoming a tax lien and tax deed investor. The second department is the appraiser's office or the county assessor. And this is really the person that conducts property evaluations on every piece of real estate within the county. And so this is going to be a great way for you to research the properties. Most county websites will have partial searches, so you can actually use the partial search and look up any property record. So they're going to include the property records that are going to include, the property records can include the lot size, the improvements, the zoning information, the property values, maps. Occasionally they'll have photos. They're going to give us all the information to help us decide, well, am I going to spend more time researching this property? Okay, so the partial search tool. This is a tool that you're going to get very familiar with. Now, there is a lot more online lists now, online auction list that you can just go ahead and click on the partial number. But, there's still a lot of lists out there that you're going to research individually by using that partial number or partial search tool. Now, with the partial search tool, you don't always have to search by the partial number. You can sometimes search by the address, the property owner. There may be different search categories that you can use. The partial number tends to be generally the easiest. If I'm looking up a property and for some reason I can't find it underneath the parcel number, then I'll check the property owner and see if I can narrow down the property that way. But it's usually the easiest to use, and it'll pull up directly the right property. Now, once you found the search tool, then you can just go ahead and enter the parcel number and press search. And what this partial tool will do is allow us to research these property records, pull up the property record, and then start reviewing the property records. Property records can change and vary. Some counties will include more information than others, but they're usually going to include the basic information. They're going to include the owner. They're going to include the address. They're going to include the legal description, the property classification. They're going to include the assessed value. So every one of the county records are going to have this information there. Now, they may not have a picture of the property like this county does, but they're going to have at least the basic information. How many, if it's a structured property, how many square feet, how many bedrooms, how many baths, what the lot size is, or the land size. So, some county records will have more information, more bells and whistles. Some county websites won't, but at least we're going to be able to evaluate what information is available and at least get a good idea of what the property has an assessed value is, what it's sold for. They're going to have all of that information there. So if we're looking at this property, we can see it has an assessed value of about $29,000. Looks to be like a little 3-bedroom, 2-bath, just under 1,000 square feet. We can see the property address right there as well. And so this property, with a $29,000 assessed value, it's probably worth closer to 40,000, maybe 50. And looking at the picture, I'd say, well, it looks like a nice little single-family home. Depending on the opening bid amount, I may research more into the property. Just by looking at the information right here. Then again, if this house looked like it was, burnt up or torn up, or needed serious repair, then I would probably avoid looking more into this property and would pass it by. But the first thing I'm going to look at, of course, is going to be what that value is versus what the investment amount is. Most county records are also going to contain maps that we can use. Maps can be a great tool to find out property values, to look up property records. Really used as a tool as you go through and evaluate the individual tax lien and deed investments.